Hello, everyone. My name is Simone Musa. I am a tax partner with Trinity Watanabe, and I have the pleasure to moderate this session. So welcome, and thank you for all of you who are spending these 90 minutes with us. I hope that will be very useful to you. So I will start by saying that we have a questions and answer tool, and you can ask questions at any time in Portuguese or in English, and we'll be happy to comment either during the session or as soon as we and each of the countries who will be speaking. So before we start, let me just point out or perhaps remind you, for those who have been in tax panels before, that the tax group of Trinity Watanabe is launching together with this conference the ebook on current developments, current topics and trends in international taxation. So some of the, this is an ebook which compiles articles written by partners of Trinity Watanabe. Some of the articles of the ebook are being discussed in the conference. So as is the case of international taxation on the digital economy, transfer pricing, certain aspects of the tax reform. But because this conference is multidisciplinary, we cannot have a full grade on tax topics. So the book is much richer. I hope you will assess that. It can be downloaded in our website, at the Trinity Watanabe website. And soon it will also be available at the Kindle and the Amazon platforms. Everything at no cost. So I hope you will enjoy that. So before I introduce the panelists for today, I just wanted to explain the rationale for this topic that we are discussing. So it's tax reforms around the globe, the influence of the OECD and trends in taxation in Brazil and in Latin America. So we have seen within the last decade and mainly within the last 5 years that the Latin America region and other countries of the world have gone through substantial tax reforms. And that in our region, in Latin America, that is associated mainly with three topics. So the first one is Latin American countries were applying to ascend to the OECD. And as a consequence of that, the countries had to adapt their own legislation to the OECD standards or to the OECD guidelines. And you will see that all of the countries, all of the Latin American countries that are represented in this panel today are already members of the OECD, except Brazil, who has applied and is looking for that ascension. The second is in response to the 2015 BEPS reports and recommendations. After the 2015 final report, Latin America jurisdictions started to adapt their own legislation to comply at least with the minimum standards. And that was the case also with Brazil. We've seen several legislation being enacted, for example, country by country report, legislation to avoid abuse. So that was another characteristic of this decade that we are living. Then the third is in response to the US tax reform. We saw countries in Latin America and also in Asia concerned with the reduction of the corporate income tax rate and incentives implemented by the Trump government to attract domestic investments. And they, in response, started to also reduce or lower their corporate income tax rate against taxation on dividends. So those three factors, Latin America countries were applying to become members of the OECD, and they are becoming members of the OECD. The final 2015 BEPS recommendations, and then countries adapting to at least the minimum standards, and then response to the US tax reform. That resulted in several changes in law and tax reforms in our region. And where was Brazil in that? Brazil was, to a certain extent, in an observation mode. Brazil has always taken the position that it could live with its own legislation, to a certain extent looking internally, until we saw the car wash, or the so-called in Brazil Lava Jato crisis in 2017, and then as a result, a downgrade of the investment rating in Brazil in the international scenario. And then Brazil in 2017 applied to become a member of the OECD as a way to respond and to show the international business environment that it was committed to the OECD standards, and it was back and wanting to play the international game. So Brazil has applied to become a member of the OECD in 2017. And as you know, Brazil is currently at this right moment in a very important discussion of reforms in Brazil, of tax reforms in Brazil. Not only driven by wanting to become a member of the OECD, one of them related to transfer pricing certainly is associated with Brazil becoming a member of the OECD, and that was discussed in our morning panel on transfer pricing. But we also have reforms that are discussed already for 30 years, honestly, related to our indirect taxation system, for example. But Brazil now is in a momentum where the population, the executive and the legislative bodies are all looking to the same direction to have a value-added system that is less complex, that is uniform, and hopefully we will get there in the short term. So Brazil is going through a historical moment of important reforms, reforms in indirect taxation, reforms in international taxation, as is the case of the transfer pricing, and also a possible corporate income tax reform. And for this reason, we then have called this panel mainly to see where we are in the world with respect to those topics of adapting countries' legislation to an OECD scenario and to the new scenario post-COVID, and then see where Brazil stands. So that's the purpose of our panel. I will start introducing our panelists. So we will start with Alexandra Minkovic. Alexandra is a partner from Baker McKenzie, Washington, DC, and she's going to talk to us about the US tax reform in 2017, the Tax Cuts and Jobs Act, and what should we expect for the elections next November. Then we will go to Juliana Dantas. Juliana Dantas is a partner at Baker McKenzie Amsterdam. We have invited Juliana to talk to us about anti-hybrids and anti-avoidance legislation that is coming up in Europe as a result of the BEPS, and to let us know how that can affect doing business in Brazil, or actually Brazilian companies doing business abroad and using, for example, European tradings or European finance companies. We will then have Luis Carbajo. Luis Carbajo is going to talk to us about developments in Mexico, how Mexico improved its legislation, or changed at least, if not improved, to become a member of the OECD, and how is Mexico adapting also as a response to the US tax reform. And then Ciro Meza, same thing with respect to Colombia. Colombia has just entered the OECD, so I look forward to hearing from Ciro what has occurred in preparation for that. And Martin Barreiro will talk to us about, Martin Barreiro is from Buenos Aires, he'll talk to us about Argentina. So having said that, here is let me see if I have full control of the slides. So here is our agenda, and we will start with Alexandra. Alexandra, now to you to talk to us about how is the US. I'm looking forward to hear about the upcoming elections also in November, and what should we expect from a tax perspective. Thank you.
Thank you, Simone. I'm happy to be here today and excited to talk to all of you. I think that this is a very good time to look back on the Tax Cuts and Jobs Act and reflect on where we stand at the moment. So the Tax Cuts and Jobs Act was passed in 2017, as Simone mentioned, and became effective for the most part in 2018. So we now have a few years of experience working with the TCJA. And if we could go to the next slide, that would be great. In the first year or two that the Tax Cuts and Jobs Act was effective, there wasn't a lot of guidance and instruction from Treasury and IRS on what taxpayers should be doing. And so taxpayers were left in the position of trying to interpret the statute themselves and figure out what the appropriate way was to implement the provisions. I would say that that has largely changed. By this point, Treasury and IRS have put out regulations and other guidance that interpret pretty much all of the major provisions in the Tax Cuts and Jobs Act, and any additional pieces of key guidance are really expected by the end of this year. So I think that all taxpayers will likely be applying the Tax Cuts and Jobs Act in the same way in 2020 or 2021 at the latest. Now, one of the goals of the Tax Cuts and Jobs Act was to increase US investment. And I think that there has been a pretty healthy debate in the United States about whether or not the Tax Cuts and Jobs Act actually achieved that goal. Another thing that we discovered in the US with the COVID crisis that hit us in the spring is that some of the provisions in the TCJA don't actually work all that well for companies that are not profit making or aren't doing particularly well. And here I'm thinking about the US restricting interest deductibility and getting rid of the ability to carry back net operating losses in the TCJA. We saw that when the economy started to contract and companies, particularly in some industries, really had a much harder time under the Tax Cuts and Jobs Act than they would have had under pre-TCJA US law. So I think the important question is to ask, what did we learn from that and what did we do about that in our COVID legislation? So if we could go to the next slide. So far, the US has released 3 pieces of COVID-related legislation. And the vast majority of these bills have really not been focused on the corporate tax side. There were a lot of requests from taxpayers to provide incentives to increase investment and the economy, things like expanding the research and development credit, allowing taxpayers to have refundable tax credits for businesses that invest in the United States. And most of these requests were ignored in the COVID legislation that Congress actually passed. We did see some limited benefits that were provided to business. So for example, there was a temporary increase in the limitation on interest deductibility for 2019 and 2020, but there were nowhere near as many benefits provided to businesses and to sort of increase investment in the US as I think businesses were hoping for. There are a number of federal government loan programs that were made available through the COVID legislation, but there hasn't been much interest in those direct lending programs, and they don't seem to have been as effective as companies were hoping. One thing we have seen the president try and do in, I'd say, the past month or two is to really try and use his executive authority through issuing executive orders to spark investment in the United States. These efforts really haven't been terribly successful, and that is because executive orders and the president's authority are not very effective tools. The better tools are really legislative or the president's exercise of his authority under the Defense Production Act, which he has been reluctant to use. So what is next for the United States? And if we could move on to the next slide, I think the next things that we are looking for are future stimulus legislation. Probably happen sometime in September. The government's budget, the fiscal year ends on September 30th. So in September, we expect Congress to pass a budget for next year. And we expect some COVID-related materials to be included in that, we don't expect very much on the tax front. Most of the attention in the United States is really being paid to the upcoming election in November. And this is rather interesting. I spend a lot of time on Capitol Hill lobbying for legislative changes, and I am not really expecting substantial changes to the US tax code. So President Trump has not really made any formal announcements about what he plans to do if he wins a second term. And most of his discussions on tax have been focused not on businesses, but on individuals and lowering taxes for the middle class. Vice President Biden has released formal tax proposals, but the most significant business-related proposal that he has released is to raise the corporate income tax rate to 28%. In discussions with Vice President Biden's campaign, I understand that that is not going to be an immediate change. They are very sensitive to the impact that COVID has had on the economy. And I don't think they have any plans to increase tax rates while the economy is still suffering as a result of COVID. I think Biden has really shifted his attention to focus on COVID first, deal with that issue, and then turn to other aspects of my domestic agenda, such as tax. Should Biden win re-election, I think in many ways we will see a resurgence of many of the proposals we saw during the Obama administration. In terms of how the US is going to interact with other countries and with the OECD, I don't see there being much of a difference on substance between Trump and Biden. I think the US is going to take the same positions on trade policy and in meetings at the OECD, regardless of who wins the election. The change I think you will see if Biden wins is I think that you will see more of an effort in our trade negotiations with individual countries to reach consensus and get to a compromise position. And I think the angry rhetoric that you hear from the Trump administration will not be something that we see in the Biden administration at all. But again, I think the substantive views are largely going to be the same between both of those parties. Simone, at this point, I'll pause and see if you or audience members have any questions.
Thank you, Alexandra. I'm just, I will ask one of my colleagues in the panel, because I am controlling the slides, I cannot really see the Q&A. So if you, Juliana, could see if there is any Q&A. But thank you, Alexandra. It's interesting to see that, if I could, you know, just make a summary, regardless of who wins the election, you do not foresee any substantial change in the tax system that came up in the 2017 Tax Cuts and Jobs Act reform, except for perhaps an increase in the corporate income tax rate, which has been announced already by Biden. So that's an interesting thing, because we were, for example, afraid when we were working for Brazilian multinationals doing business abroad, we were thinking of whether, for example, the territorial system that has been introduced in 2017 in the United States for taxation of foreign subsidiaries would be preserved, and other important changes that were made in that reform. So you think that the basic structure of the reform will remain?
I think so in the short term, and I think that's due to COVID. I think if COVID didn't exist, the Biden administration would have other priorities. But I think priorities 1, 2, and 3 for Joe Biden, if he wins president, are to get rid of COVID and open back up the US economy. I think everything else comes further down the list.
Okay, well, thank you very much. So having said that, let's go to Juliana Danta. So Juliana, we are looking forward to hearing from you on developments in Europe. Europe is very important to us. Why? Because either because as an importer of capital and a place where several subsidiaries of foreign multinationals is located, we do have in Brazil and Latin America holding structures for holding the investments in our region through Europe. So that interests us a lot. And also we do have, either for exporters from Brazil, or we do have economic groups that have trading companies in Europe. So it's a region that interests a lot, especially for its historic background for having privileged tax regimes, if I could say that way, but for having regimes that are favorable for companies to establish holding structures, trading structures, finance structures. So, word to you, Juliana.
Thank you, Simone. Indeed, a lot has happened in Europe in the last years. I don't think we have this election excitement that Alexander just mentioned in the US, but we do have changes and we will have elections next year, so let's see. I think it's important to say that today I want to share two main messages with you. And indeed, they relate, as Simone just said, to elements of structures that Brazilian companies often use. There's a lot to say, so I'm focused on these 2 points today. And these points are the interest on equity, the treatment of that in Europe, and the informal capital. But before I go on, I think it's important to go back a little bit to where it all started. This whole thing started with the BEPS project, of course, and that triggered several changes. 3 main important things that happened that were big changes in Europe were the directives of the EU, ATA 1 and ATA 2, and the DAC 6 directive that we are implementing as we speak. These directives, they brought a lot of changes. For some countries in Europe, more than others, because some countries already had some legislation, some anti-abuse legislation. As you know, ATA 1 focused on interest deduction limitation, CFC, general anti-abuse rules, exit taxation, and anti-hybrid rules. And ATA 2 on very specific hybrid structures, also connected with the US. The Netherlands started very early, actually, in 2016 already, implementing one specific rule that I show in the next slide that relates to the Dutch participation exemption. And other countries in Europe have done more or less the same. Each country with its own specifics, but in general, it was the same idea. So the anti-hybrid rule mainly says that if a payment is deductible in the country of origin, we cannot exempt it anymore in Europe, even if we have the participation exemption regime. Simone, if you can change the next slide. What that means in the Netherlands is that now the interest on equity is taxable, fully taxable against 25%, but at the same time, we have a credit under the treaty between the Netherlands and Brazil that allows a full credit against the Dutch tax due on that income. So effectively, although we changed the treatment, the effect is the same, right? So the effective taxation on the interest on equity is still the same. That means that the interest on equity still works in the relationship Brazil-Europe. And that applies to different countries, Spain, Luxembourg, the Netherlands. So my main message here is to say that actually for the interest on equity, that's something that still is possible, unless Brazil changes that in the next reform, I don't know. But in principle, the way it is today, it still works. So going back to the directive, so ATA 1 and ATA 2 are going to be implemented. ATA 1 has been already implemented by many countries, and ATA 2 is being implemented and relates to anti-hybrid rules. You can ask yourself, does that impact the informal capital, which is also a hybrid type of structure, right? But that's not a typical structure. That's not an instrument that is being given by an entity A to entity B trying to create a double dip or something like that. The informal capital is, of course, a real difference between systems. And you have on one hand the Brazilian transfer pricing rules and the Dutch transfer pricing rules. And those two combined lead to the fact that some profit is not being taxed anywhere, because the Netherlands apply its own rules, or Austria or Spain, they have all the same concept. The good news on one side is that ATAD 1 and ATAD 2 that are being implemented do not affect the informal capital directly. There is no rule in this directive saying that the informal capital should be taxable. But the informal capital is under a lot of pressure. That's something I can share with you, because under the DAC 6 directive, the informal capital has been considered already a reportable arrangement. That means that we will have exchange of information on informal capital as from this year. That is also maybe not so new, because we already had the exchange of the tax rulings. The tax rulings are those confirmations in advance that you can get from the tax authorities on the treatment of a specific structure, so in this case it's the informal capital. Those rulings were already exchanged, so this is also not new, but it's an extra thing to consider. In many countries, but also in the Netherlands, it's not possible anymore to get tax rules. You could get certainty on your position. That's no longer possible. That doesn't mean that you cannot apply the informal capital. Technically, it's still possible, and we can also advise on that still, but the company should consider that there is pressure. Also, this year there has been a report published in the Netherlands about the taxation of multinationals, and in that report, experts that were hired by the government were saying that something must be done about informal capital. I expect that the Dutch State Secretary of Finance very soon will tell us something about informal capital, whether that's still possible or not. And they are discussing in Europe about this as well. So I expect that in the very short to medium term, something will be said about informal capital. So I think in general, for the Brazilian multinationals, when investing in Europe, it's important to be aware that although things, the specific things that we do with Brazil are still possible technically, there's a lot going on, there's pressure on this type of concepts, and we should be aware of that when you plan, and also when you think about the future and what uncertainties are there to be considered. So that's my main message, Simone. I don't know if there are questions.
Thank you very much, Juliana. Bom, I hope many of you know what informal capital is. Juliana explained well, but that applies mainly to Brazilian companies doing business abroad. And it's a transfer pricing, actually. It's a result of the mismatch between the different rules we have for transfer pricing in Brazil and in the Netherlands, in the case at hand. So one thing that we were discussing, Juliana and I, is that the informal capital will probably be at risk as a structure available for Brazilian multinationals doing business abroad, either because Europe and the Netherlands is getting, let's say, close to an end with respect to this type of nowhere income or taxation of income at a very low level, or because Brazil, once it aligns its transfer pricing methodology to OECD, also probably what is not taxed in the Netherlands will end up being taxed in Brazil. So the informal capital then would not, even if it still exists, will no longer be available from a Brazilian perspective as well. So I think that's a good message. The other message that I think is very relevant is the double dip. If it's not deductible, if it is deductible in Brazil, it will probably be taxable in Europe under the anti-hybrid legislation coming up as a result of BEPS. So things are like making sense now from a global perspective. That makes sense when we see the globe as one unity, indeed, for tax purposes. So thank you very much, Juliana. We will hear now about the Brazil upcoming tax reform and changing laws. So Juliana Assis, now with you.
Hello, Simone, thank you. Good afternoon, everyone. My name is Juliana Assis. I'm a tax partner in Trent Ross Watanabe, and I will try to discuss in this little time a little bit about the tax changes, the expected tax changes in Brazil. But before coming into the specifics, I think Simone well explained in the beginning the reasons of the tax changes and upcoming and expected tax reforms. But I think the most important message here, more than discussing specifics, is to understand that we have reasons behind the changes. From the indirect tax standpoint, we would say that the changes, they are more related with simplification of our tax system, which is very complex. And if we take the corporate income taxes, then they are more related to alignment with international principles, OECD principles, transfer pricing regulations, and also alignment in terms of corporate income tax rates. So let's talk a little bit about the corporate income tax changes. I would say the first one would be alignment with the principles, OECD principles. So we know that Brazil has formalized the request to join OECD to become a member. As a result of that, in 2019, OECD and Brazilian IRS formed a joint task force where they studied, researched the transfer pricing legislation in Brazil to conclude on compliance with transfer pricing guidelines as provided by the OECD. The conclusions, of course, as we know, were not very positive in the sense of compliance. Actually, the conclusions are that Brazil does not follow the arm's length principle and that the mechanism established by the transfer pricing legislation in Brazil may lead to double taxation. So having that in mind, the development on the final report issued by the Joint Task Force was very recently a launch of a public call, a public consultation, also with OECD and Brazilian IRS to the taxpayers and interest parties, so that the IRS and the OECD can gather information regarding transfer pricing in Brazil and may come up with possible solutions for a gradual implementation of changes in the transfer pricing legislation. The concern right now is that although everyone agrees that transfer pricing in Brazil need to align with the international principles, there is the perception that the current legislation is very simple to apply because of the safe harbors, because of the fixed margin rules. So the intention now at this part of this consultation would be to try to draw some conclusions on possible safe harbors that could apply, for instance, to some sectors, so that Brazil can move to a change in the transfer pricing where it is aligned with OECD, but at the same time, it is also simple as it is currently under the perception of the Brazilian taxpayers. Can you change the slide, Simone, please? Okay, so continuing with respect to the corporate income tax changes and also related to alignment, there is a discussion, a very important discussion on the change on corporate income taxes. In terms of alignment with principles and taxation abroad, the corporate income tax combined rate in Brazil currently is 34%. The aggregate rate is 34%. If we take the 37 members of OECD, they all will have lower tax rates. The most common or average tax rate, if we look into the list, would be 25% rate. So Brazil stands in a position where the corporate income tax rate is higher than average or higher than most of the partners it has in transactions, in global transactions. That situation alone could make Brazil less attractive in terms of receiving interest and receiving investment from abroad, because in the end of the day, the other countries would be taxing the profits at a lower rates. It also imposes some difficulties in terms of being a center or a place where investments come, where centered the investments in Latin America, for instance, because the profits that would be then earned in other jurisdictions would eventually be taxed in Brazil at a higher rate of 35. So taking into account the need to align with the international rates, there is a discussion on reduction of the corporate income tax rates. However, Brazil is not in a position, as we know, to give up on revenues related to taxes. So a potential alternative to align with the corporate income tax rate, reduction and maintain the level of revenues to the Brazilian government would be then to introduce the taxation on dividends, withholding income tax on dividends. Brazil has exempted dividends distribution from income tax as from 1996. So now there is an important debate on returning the taxation of withholding, returning the withholding income tax on the dividends distribution, while at the same time reducing the corporate income tax rate, so that we maintain the same level of taxation, so a neutral level of change, and become aligned from an international standpoint in terms of corporate income tax rate. Along with the change in the dividend distribution, of course, it would not make sense to keep deductibility of interest on equity. So it is then expected, and we already have this in Bill of Laws, that in such case, the interest on equity alternative would be either revoked or deductibility would not be allowed. Also, with respect to corporate income tax, at the individual level, we expect to have some changes. The government has been discussing turning into a more progressive system where where they would create higher brackets for wealthier individuals, and also prohibiting the deduction of certain expenses, for instance, medical expenses. So this would be the change in the model of corporate income taxation in Brazil that is expected currently. The pros, of course, align with the international community, a more progressive system, avoids to a certain extent certain individual income tax planning, such as hiring through legal entities. And it also expects to increase investment, because since there is a cost implied in the distribution of dividends, it is expected that profits are retained in the companies and reinvested, therefore generating more profits and more investment in Brazil. As to the cons, I would say here we try to list some cons, but they are more concerns and not direct cons of the introduction of the dividend distribution taxation on the distribution. It's a concern that the dividend taxation has to come together or along with the corporate income tax reduction in order to be neutral and acceptable for the companies in Brazil. There has to be mechanisms for the government to inspect and be aware of potential tax plannings that could then start to be implemented in order to avoid taxation, so disguised distribution of profits. And there is also some concern with the perception of foreign investments in the Brazilian financial markets, whether they could see the withholding income tax on dividends as increasing taxation. Although it should not be, because if it comes out together with the corporate income tax reduction, it should not represent increase, but there may be a perception of increase in the total taxation. So it's important that this perception is well discussed with the market, so that we do not have a decrease in investments where we are trying to attract more investment and have a modern tax system that is aligned with the international principles and tax rates. So final conclusion for corporate, final conclusion for corporate income tax rates, income tax changes, is that it has to be aligned with other changes. It's certain that no one would welcome the change in the withholding income tax on dividends without other changes to neutralize the impacts of such increase in taxation. Together with the corporate income tax, then we have the indirect tax reform that we have been discussing for so many years, as Simone said, for decades actually. Well, the basic problem, I think it's well known. We have so many taxes. It's very complex. So many accessory obligations for each of the taxes. Conflicts of jurisdiction, conflicts of scope of each taxes, all such tax incentives, conflicts regarding application of tax rates, tax systems. In the end of the day, what we have are litigation, very expensive litigations that take a long time to be resolved, increasing therefore the cost of operating in Brazil. So this is basically the problem with the VAT tax system currently. Simone, can you change it, please? So taking into account the need to simplify the indirect taxation in Brazil, we have basically now 3 main reforms under discussion. The most recent that has been under analysis was proposed by the government, and it was very expected coming from the government, but in my first impression, I would say that the reaction has been a little bit of a disappointment from the market, because the proposal as it is now is very narrow. It only replaces PIS and COFINS with another contribution, which is called CBS, Contribution on Goods and Services, and does not actually solve the full scenario of all taxes, indirect taxes that apply on sale of goods and services. So the fact that it is very narrow is one of the criticisms. There are other criticisms that are based on technicalities of the legislation, whether it should apply only to goods and services or other revenues, whether there will be accumulation of tax credits, or whether there will be unfair increase of taxation to certain sectors of the industries, so in Brazil. So these are mainly the issues at discussion and criticism regarding CBS. There are positive points as well. CBS would be a true VAT tax, therefore it would allow full credits in the acquisition to the taxpayers, which would then eliminate the discussion regarding the concept of inputs that we have in Brazil, and all the litigation regarding possibility of taking credits. So this is a very positive aspect of the CBS. However, there are some clarities needed to this proposal in order for approval, or in order for the market to become more welcome to this proposal. That's my perception. There are certain matters that need clarity, other matters that probably will need some corrections or amendments in order to fully serve as a replacement for the PIS and COFINS. Can you change the slide, please? Along with the CBS change, the government has also informed that they intend to propose a tax reform in phases where they will not only change the PIS and COFINS, replace the PIS and COFINS, but will also introduce other changes. Of course, the corporate income tax changing rate that we already discussed. They also intend to implement the excise tax, so they would replace the current IPI, the tax on manufactured products. They would replace with an excise tax that would only apply in certain products, which would be fuel, tobacco, alcohol, and others. And finally, the most controversial tax, which is what we call here e-commerce tax. It has been also called the digital CPMF, which is a tax that would apply on e-commerce transactions or purchases over the digital economy. This is very controversial. I would say Congress has already publicly informed they do not agree with the inclusion of such taxation. There has been a lot of discussions. It's yet to be seen. It's too early now in this moment to conclude whether or not this will be really introduced in the Brazilian tax system. Simone, can you change, please? And this is our final slide, just to say that there are two other main tax tax reform proposals in the table under analysis, PEC 45 and PEC 110. Those PECs, those projects for change of our federal constitution, they are much broader than the one that has been just brought by the government. So they really replace all the indirect taxes and propose to have only two taxes, IBS, which is a tax on goods and services, and a selective tax, which would be a kind of excise tax. So it's broader, it's more comprehensive. And I would also say that because of the disappointments with the CBS, with the introduction of the CBS, it's possible that those projects that were introduced for analysis before than the government's project, they become now, they have more attention in terms of analysis, because they have been targeting in terms of simplification. They will be more effective and maybe from a technical perspective more acceptable to the Congress and to the market. But this is only a perception. We are still all waiting. The government is about to issue new proposals for changes, so it's yet to be seen. That's something we'll have to wait a little bit more. But, well, that's what I had for Brazil, and if we don't have any questions, I can pass over to Simone again so that we can continue the presentation.
Thank you, Juliana. And it's amazing that there are no questions with respect to the Brazilian tax reforms. So there are three areas, big areas of reform: income tax, transfer pricing, and the one which is more advanced, indirect taxes. So we should have a complete new system, in fact, in the upcoming months or years. Structural change, and it was interesting because I saw one interview from the Minister of Finance, Paulo Guedes, for a bank in Brazil, and the interviewer asked him whether privatizations were a priority of the government, and then he said, "Well, the privatizations, what are you going to do with the money? We are going to repay expenses. Yes, we need to do that. So we need to repay, public debt. But that will not change Brazil. What will change Brazil are the reforms and the ways, and mainly the tax reform. That one is a structural change, and that one will change Brazil. So that's the priority." So that was an interesting, to me, that marked, my day. That was end of last week. So I think the government is very serious in implementing those, and the legislative actually is taking ownership of the indirect tax reform. We do not yet have a concrete or a bill of law for the income tax reform. So that's something that the government promised to issue by the end of this month, but we don't know if the reform that actually, the income tax reform that actually is going to be approved in Congress is the one proposed by the government, or is the one proposed by the legislative itself, which is also working on the comprehensive income tax reform, lowering the income tax rate, imposing withholding on dividend distribution, and enlarging the base. So eliminating deductions, together with the individual income tax reform. So this is something that we should see indeed, and we'll be happy to share with you all, to our clients, the news and developments as they come up. So now we will go to Mexico. Luis Carbajo is going to talk to us about the tax reform, mainly to tackle the BEPS issues that are coming up in Mexico. So Luis, now to you. Thank you.
Thank you very much, Simone and Juliana. Thanks for the invitation. Well, as you know, Mexico has been part of the OECD for a number of years now. We have taxation at the shareholders level on dividends. We have VAT as well as any other jurisdiction in the OECD model. We have several other indirect taxes. So you would have the possibility in Mexico to get excess credits. There is no way to monetize them. I understand that in Brazil, you have the possibility to monetize those excess credits from a VAT standpoint. It's not a surprise. Mexico is following the US and Brazil in terms of the pandemic. The only difference is that Mexico is not granting any specific tax incentives or any incentives to keep the cash in Mexico. I don't know what is going on with Mexico. It used to be very open. Now we don't have many good news to spare in connection with the political arena and in connection with the tax environment in Mexico. Something very important here to consider is that as of January 1st of last year, of 2019, we have a new government, López Obrador administration. He announced that he would not create new taxes and he would not increment the tax rates. This has been the position of the new government. And basically, in the 2019 and 2020 tax reforms, there is no new taxes being created and no tax increments in the rates, in the specific rates. However, Mexico is following the BEPS actions recommended by the OECD. As you can see here, since 2013, the BEPS report were published, in which 15 specific actions were published by the OECD. Those specific reports were published in its final format in 2014. And in 2017, Mexico signed the multinational instrument. However, this multilateral instrument has not been yet ratified by the Mexican Senate, so it is not applicable at this moment. We're expecting Mexico to sign the specific MLI anytime now. Can we move to the next one, please? So basically, Mexico, following the OECD, took into consideration in order to implement the recommendations that in 2010, countries such as Barbados, Bermuda, and the Virgin Islands received more foreign direct investment, more than Germany or Japan. And these three countries, Barbados, Bermuda, and the British Virgin Islands, invested more in China and Hong Kong, more than the United States. And Mexico, as part of the OECD, collaborated with more than 135 countries in order to come up with a specific BEPS recommendations. Next, please. So basically, following a local environment, Mexico has a very serious tax problem in connection with tax evasion and tax avoidance. The Mexican Tax Administration, or the SAT as we call it in Mexico, detected an evasion of more than 354 million pesos through the so-called fake invoicing. And according to the SAT, more than 8,204 companies engaged in this specific transactions involving fake invoicing. Next, please. But this has not been the problem. I mean, basically, as of January 1st, 2020, Mexico has implemented, I would not say a comprehensive tax reform, but basically Mexico has adopted many of the specific recommendations from the OECD. For instance, if you follow Action 1, Mexico has already implemented a VAT and income tax withholding on certain transactions doing or performed through electronic platforms. I know that in Brazil, this is subject to a lot of debate, but basically Mexico is putting the requirement for companies that do not have specific permanent establishment exposure or any other type of physical presence in Mexico to register and apply withholding not only from an income tax, but also from a VAT perspective. And this creates a lot of issues for companies such as, you know, the specific taxi drivers or the specific electronic platforms that are now required to register for VAT and income tax purposes. In connection with Action 2, we have a specific limitation on payments to foreign tax jurisdictions or low tax jurisdictions. Remember that in Mexico, we do not have a specific blacklist of companies that would be considered as a low tax jurisdiction. Anything below 22.5% at the end of the day may be considered as a low tax jurisdiction. We have a limitation of deduction to this type of payments to low tax jurisdictions. And of course, we have a specific withholding issues to payments abroad in connection with low tax jurisdictions. Here, something very important is that nobody's gonna tell you that our main trading partner, such as the United States, is going to be considered a low tax jurisdiction, even if the effective tax rate in the US is 21%. I understand from Joe Biden's proposal that it would increase to 28%. So probably we would not have this type of discussions in the near future if Joe Biden would win the elections. Otherwise, you would have to get sound tax advice in order to seek for some alternatives in order to avoid this limitation on the deductions of foreign payments, provided that you have substance on the transactions in the US or in any other treaty jurisdiction with Mexico. In connection with Action 3, we do have a specific positions on transparency. In the past, Mexico has recognized transparency basically with the US. The LLCs were fully recognized as transparent entities. We have already put a specific reserve in order to make it sure that under Mexican tax law, Mexico does not recognize transparency as such in the future. So this creates a lot of issues with basically our main trading partner, the US. In Action 4, we have a certain additional limitations on interest exceeding 3% on the adjusted taxable income. We also have the thin capitalization rules for this type of transactions. Action 5, and if we can go to the next slide, please, Action 5 through Action 12, at the end of the day, we do have a specific list of activities that would be need to be reported on a specific formats as of next year. So this is part of the implementation of the recommendations from the OECD perspective. Something very important here to take into consideration in connection with Mexico is that Mexico being a very formalistic country, you would have to demonstrate a double juridical taxation in case that the Mexican tax administration considers that you are applying on an undue form a specific benefit under a given treaty. So this is a new requirement in order to apply the benefits under a given tax treaty in order to avoid the so-called abuses in the application of the treaties. Again, Mexico being very formalistic and being part of the OECD for a number of years now, we do have a specific and very robust and mature transfer pricing methodologies following the OECD. We follow the OECD transfer pricing guidelines. We do have a specific obligations in connection with the master file in the country by country report. We have an ample exchange and broad exchange of information with many of our treaty partners, the US, the Netherlands, and other specific jurisdictions. So we do have a very, very robust FATCA and common reporting standards. And now with the new reportable transactions obligations, we continue to believe that Mexico would be one of the big actors in the auditing arena in the years to come. And the last word in connection with Mexico, we have signed the multilateral instrument since 2017. However, the Senate has not yet ratified the specific MLI, so it's not in observance at this specific point. Thank you very much again, Simone. In case that you have any specific questions, more than happy to assist.
Yes, there is one question here, Luis, which is, has there been any further update on the regulations related to the new law enacted in January 1st, 2020? I believe it was previously believed to be in June, July 2020, those regulations.
Yeah, we do have some specific rules in connection with the VAT obligations for the so-called electronic platforms compliance. We do have a lot of issues in connection with the registration of non-resident entities in the specific platform that needs to be registered. But other than that, we do not have more guidance other than audits at the end of the day, because Mexico is enforcing a new requirement for every transaction undertaken by related parties. Basically, that you have to provide a business purpose to the specific transaction. Other than that, we don't have more guidance, but we're expecting to have a comprehensive set of rules to be published once the pandemic gives us some time to react on this.
Thank you very much, Luis. I think it's responded. I don't see any other question. Well, Mexico is perhaps is our future. When I see the developments in legislation associated with BEPS, I mean, perhaps we can anticipate what can come up on our way. Don't say thank you very much. Let's move on to Colombia. Ciro, Colombia has just joined the OECD, so we are very curious to know from you what came up before and what is the experience currently.
Thank you very much, Simone. Thank you for the invitation, and hello to everyone who's assisting to this important conference. Yes, I will be happy to share with you the Colombian experience as becoming member of the OECD. And now that I've heard my colleague Juliana speaking about this, I believe that, and of course, making the caveat that every process is going to be different, and specifically, I would say Brazil, due to its complexity, especially, it's probably going to be very unique. Looking at Juliana's comments, it seems that at least a portion of the situation that Brazil is facing right now was similar to the one we had several years ago. And all of these changes have been mainly promoted, and the changes I'm going to be discussing in these brief moments due to our involvement with the OECD and all of the process and all that it took to become member of the organization. Officially, the process, I would say, took around 7 years. It began when Colombia was when the OECD took the decision to open discussions with Colombia in the year 2013. 2 years after that, in the year 2015, the OECD in the Global Forum of Tax Transparency praised the high level of commitment of Colombia in several aspects, specifically in the exchange of information, but it also made that assessment as a result of evaluating its domestic legal framework. I'll show you later on in the following slides that Colombia actually began working on changes in its legislation several years before we actually became part of the OECD. And for instance, it was in the tax reform of the year 2012 effective as of the year 2013, when the robust and very substantial changes came into effect. I'll refer to these changes later on, but this is simply to mention that when Colombia started working, trying to adapt its legislation to the OECD and to the OECD guidelines and principles, was much more before our acceptance as part of the organization. And it was in the year 2018 when we received the invitation to become a member of the OECD. Of course, we did not do so immediately, as there was an internal procedure that had to be met internally and domestically, specifically getting ratification from Congress and the Constitutional Court, which was finally concluded some months ago in April 2020, when Colombia officially became the 37th OECD member country. If we could move to the next slide, please. In this one and in the following slides, I just want to briefly show you can you go to the previous one? Sorry. That one's perfect. I just simply want to show you how the process occurred and how that has impacted several aspects of our tax legislation, specifically the corporate income tax issues and the income tax for individuals side. We have seen in the last 7-8 years a trend in the changes that have occurred in these fields, and these changes have occurred mainly due to OECD recommendations, as I mentioned before, Colombia trying to adapt its guidelines and principles to the OECD and what the average OECD country is now performing. And actually, by the year 2016, the collection of income tax in Colombia, both corporate income tax and individual income tax, was around 6.8% of Colombia's GDPs. That's relatively similar to the collection figures that at that time were shown by OECD countries, a bit below the average OECD countries, but a bit above the OECD countries of the region, to say Argentina, Mexico, and Chile at the time. But what was curious about that was that from that 6.8%, 85% of the collections came from companies, from legal entities. That included what we call large taxpayers and taxpayers, which mainly are legal entities. That situation, of course, contrasts substantially with the situation that we would have seen at that time with the typical OECD country. Actually, figures indicate that that in the case of OECD members of the time, the average collection coming from individuals was 72%. So that, compared with the Colombian situation, was a radical. We were at two ends. And the average income tax rate for companies was approximately a bit above 25%. So what the picture that we had in the year 2007, 2015, 2016 was, from the OECD perspective, average country compared to the Colombian country, radically different. We had a country in Colombia that heavily burdened legal entities and offered reliefs to individuals, and all of the income tax collection was heavily supported on legal entities, whether large payers or ordinary taxpayers. And actually, if you see at what occurred in the year 2012 to the year 2016, the rates were fairly similar. the rates were fairly similar. Colombia had rates for corporate income tax that range between 30 and 35%. The same rates, nominal rates, I would say, applied to individuals. Of course, these are, in the case of the individuals, I would say that these are nominal rates. The individuals were offered with abundant deductions and exemptions, and the thresholds for individuals to file income tax returns were very high. So that explains why, despite the fact of having similar nominal rates, the burden traditionally has been put on companies rather than individuals. Now we can go to the next slide, Simone, please. Now we see how the trend begins to change in the year 2017, when Colombia becomes more active as being part of the OECD. For example, we see how the corporate income tax rate has begun to decrease since the year 2018 up until the year 2020. In the year 2017, due to several temporal taxes and surcharges, we had a corporate income tax rate of almost 40%. That rate, you can see that it has been reduced, that it has been decreasing, and currently it has been fixed in 32%, but it is expected that in the following 2 years is going to be phased out, not phased out, but progressively reduced to a 30% rate. And on the other hand, we see that the taxation on individuals is tending to increase. What was the traditional rate of 33% applicable to individuals has now been increased, and the highest basket rate applicable to individuals is 39%. Of course, to make this effective and to change the trend in income tax collections, there has not only been an increase in the nominal in the nominal rate for individuals, but also there has been a significant cuts on exemptions, deductions that used to be available, et cetera, and this is all changing the panorama. Next slide, please, Simone. And if we add up to that the existence of the dividend tax, this will evidence Colombia's alignment with OECD standards and practices. Colombia had never, as in the case of Brazil, did not have a dividend tax, but only until the year 2017. And it has remained, actually, it had a temporary increase during the year 2019 of up to 15%. Now we have a 10% dividend tax rate, and actually you still hear voices in Congress of the possibility of increasing the dividend tax, mainly for individuals, but of course it is a tax that also impacts every time there is a dividend distribution made outside of Colombia to a non-resident person, call it legal entity or individual. So all of this panorama indicates how Colombia is shifting its tax system and its tax policy towards a system in which it poses its burden mainly on the individuals rather than on companies. Colombia is also focusing efforts on reducing the corporate income tax rate. We had rates of approximately 40%, as I mentioned, and we expect to have a rate of 30%. I haven't heard, or we have not heard, any initiatives to reduce that rate below the 30%, but at least that is a good advance. And for example, Colombia traditionally had what we call equity taxes in different forms, in the form of a traditional equity tax or in the form of the presumptive income tax. Those equity taxes have remained exclusively for individuals and have phased out completely in the case of legal entities. So probably this panorama is somewhat similar to what may occur to Brazil in the future, specifically considering those guidelines and how the trend is to impose taxation mainly on individuals and not on companies. Please, the next slide, Simone. I think it's before that one. Thank you very much. And this is simply to show and to indicate how Colombia, since it began its process, both officially and non-official, of becoming part of the OECD, was constantly working on making changes on its legislation to adapt it to OECD guidelines, to BEPS, et cetera, I think that if you could move to the previous slide, Simone, please. You're on the Chile tax reform right now.
That's not an easy task, Ciro.
Okay,
I think
sorry about that.
If you can close
I'll
your
speak by
discussion.
memory. I'll speak by memory. Don't worry about it. No, I was simply saying that during these 8 years, we have had a number of tax reforms. In all of those tax reforms, we have seen changes that try to align our domestic legislation with OECD principles. We have had changes in PE matters. We have created CFC rules. We have created a VAT on digital transactions and services provided from abroad. We have included regulations on disclosing information of the UBO, the ultimate beneficial owner, to comply with information exchange agreements. We have created participation exemption regimes, and in some, I would say we have had so many initiatives, ThinkCap, rules, etc., that have been adjusting through the times and through this last decade in a way to align ourselves with the OECD. And just a brief note to end my intervention is simply to mention that this year, while we normally do have tax reforms, at least in average, we have had in the last 20 years a tax reform every 1.5 years approximately. This year, due to the COVID situation, it is highly likely that we are not going to be having a tax reform, although there have been some initiatives in Congress by parties not supporting the government. The government has been emphatic on the fact that at least for the year 2020, no tax reform should be in place, and if any, one should be put in place by the year 2021. So thank you very much for your time. I'm open to questions if we have time right now or later. Thank you, Simone.
Thank you very much, Ciro. Actually, there are no questions. I wanted to make several comments because I think the process we are going through in Brazil is closer to the Colombia process than to whatever other countries we may discuss. I think this calibration of corporate income tax and dividend tax, the transition from dividend exemption to then imposing taxation on dividends. I think that's a very interesting discussion that we will go through in the next phase of the reform, especially because if the government increases too much the dividend tax, you may have a situation where non-residents under treaty limitation will pay less than Brazilian residents, and then that can give rise to other types of planning. So let's see if we can schedule a discussion specifically on the corporate income tax reform once that comes into our Bill of Law in Brazil. Let me ask you, Alberto Maturana from Chile and Martin Barreiro, to try to keep your presentations within 5-7 minutes so we do not go too much over time, considering that our session is already of 90 minutes. So having said that, let me ask Alberto to start. Thank you.
Okay. Thank you, Simone, for the invitation and the opportunity to speak to this audience about the Chile 2020 tax reform. But first, let me provide some context. Yes, Chile has faced many changes, but these changes are not only legal changes. In the last year, you may have seen in the news, Chile faced not only the pandemic since March this year, but also since October or November of last year, Chile has had some huge episodes of social and political unrest, the so-called social explosion, estallido social. These were massive and very noticeable social demonstrations, which were hitherto unseen in the last 30 years of democracy. And this has been coupled with a rather troublesome political landscape as well, where the center-right government doesn't have majority in Congress. So as a result of this political landscape and the social demonstrations, we will have in October a constitutional referendum. So there will likely be significant institutional changes, which we, of course, will need to closely monitor in the weeks ahead. It is in this context of crisis that the Tax Reform Act was enacted in February of this year. And as a result of the COVID, there have also been some emergency measures. So there have been a number of legal changes. If we go to the following slide, please. In the few minutes I have, let me highlight a few of the key changes that I think a multinational corporation, a Brazilian company, or a multi-Latina should take into consideration with respect to their operations in Chile. Number one, VAT. There is a new variable event on so-called digital services provided by foreign suppliers. Digital service is a very comprehensive, a very generous concept. It is defined specifically for VAT purposes, and it includes video, music, entertainment platform, software, cloud services in general, publicity and advertising services. Before this Tax Reform Act, these services were not subject to VAT. They were only subject to withholding tax, if at all. So now there is an interaction between withholding tax and VAT that multinational companies should be taking into account very closely, because sometimes there is withholding tax, sometimes there is VAT. There should never be the both taxes, but since VAT is recoverable, local companies should, in general, prefer to be subject to VAT than withholding tax, which is generally a cost. Number two, there is now an opportunity to review the debt financing strategy of companies. We generally tend to recommend companies to use as much debt as possible. But today it is probably the best opportunity to review the debt financing structure because in first place, there have been changes on the requirements for the interest payments to benefit from the reduced 4% withholding tax rate. And number two, there is now a 0 rate stamp duty on new loans or extensions of pre-existing loans. So it is now the opportunity, in particular, before the 30th of September this year, to review your debt financing structures. It is also, number three, the opportunity now to review your holding structure, because in Chile, it now makes a huge difference whether the shareholder resides in a treaty country where the overall taxation from an income tax point of view is 35%, or the shareholder resides in a non-treaty country where the overall income taxation adds up to 44.45%. Brazil, of course, has a treaty with Chile, so Brazilian shareholders of a Chilean entity would have no problem. But if you belong to a multinational corporation where the shareholder of the Chilean company resides in a non-treaty jurisdiction, it is now the time to review that holding strategy. There is, number four, there is a tax saving opportunity, very interesting, on the repatriation of pre-2017 profits. So if your company in Chile happens to have a nice pool of pre-2017 profits, there is a reduced tax of 30% which of course compares very nicely against the general 35 or 44.45% overall tax. And this is considering even your full corporate tax credits. So just to give you an example, I am now advising a company that has a nice pool of pre-2017 earnings available with 24% corporate tax credits. So the difference to be paid is only 6, the difference between 30 and 24. So if you happen to have a company in Chile which earned pre-2017 profits, it is now until April of 2022, the opportunity to take advantage of that reduced 30% tax. Number 5, there are new deductibility requirements. This is in line of a pro-taxpayer measure. This is because there is a new concept of necessary expenses. In order for expenses to be deductible, they need to be necessary. And now there is a definition that is more relaxed in the sense that necessary expenses are not only those that are unavoidable and indispensable, they just need to have the capability, the ability to generate profits, and you're good. And finally, there is a new PE definition in the statutory law for the very first time. Previously, we lawyers needed to take a look at typically the revenue interpretations and the treaty rules to see what was a PE. Now there is a statutory definition, and interestingly enough, that new statutory definition basically includes the fixed place of business PE concept and the agency PE concept. It doesn't include the service PE definition that you typically see in treaties, the 183 threshold rule. So it is interesting because many foreign companies doing activities in Chile without a company have now clearer rules and thresholds to define when their activities may create a taxable presence and when not. Over to you, Simone. Thank you.
Thank you very much, Alberto. It was a great presentation. So let us finalize with Argentina. Let me ask Martin.
Thank you very much, Simone. And if we can go to the next slide, please.
Yeah, that's what I'm trying. Here you go.
Okay. Well, even though the title of the presentation is Tax Reform 2020, the tax reform for 2020 is still a project. Actually, yesterday, the head of the tax authority announced that we still don't have any project, any draft, but basically the decision of the government was basically to increase the impact of the tax in Argentina. So going quite the contrary, as many of the country in the region, Argentina is planning to increase the tax impact and the taxation of the operations in Argentina. So basically, the first slide is in connection with a process of tax reforms which started in 2017. And basically, the main topics to mention about the tax reform, which was initiated in 2017, is the first comment in connection with a decision to include in the Argentine income tax law the taxation of the sale of non-Argentine companies when the Argentine companies have underlying assets located in Argentina, and if certain conditions are met. So basically, this is the first time in which the income tax law includes a provision to impose income tax on the transfer of shares of the foreign shareholders of Argentine companies. Up to that date, basically, the taxation of the transfer of shares of Argentine company was just limited to the foreign shareholders of the Argentine company. The second concept to mention is basically the new definitions included in the Argentine income tax law with respect to non-cooperative jurisdictions and low zero taxation jurisdictions. With respect to the non-cooperative jurisdictions, at that time, and we are talking basically at with respect to the tax reform in 2017, which was published at the end of 2017, at that time, it was included that non-cooperative jurisdictions would be those jurisdictions which were not effectively complying with the tax information, the exchange of tax information with Argentina. then we will see that the list of those jurisdictions which qualified as non-competitive jurisdictions was basically published at the end of 2019. So basically there was a big period of time in which there was no certainty with respect to which were the jurisdictions that would be considered as non-competitive jurisdictions. The second concept to mention is basically the new definition of low zero taxation jurisdictions, which are basically those jurisdictions in which the taxation was lower than 60% of the Argentine 25% corporate income tax. So basically, those jurisdictions which were triggering or which were applying a taxation of 15% or lower than 15% were considered low or zero taxation jurisdictions. And remember that in 2017, this was a year in which the US tax reform was also under analysis, and one of the projects under the analysis of the Congress in the US was basically a project in which basically they were planning to reduce the corporate income tax rate to 15%. So this was very critical at that time because it could be considered that a US company would be considered as a low zero taxation jurisdiction at that time. So technically that was obviously afterwards resolved because the corporate income tax rate in the US was 21% and not 15%. Simone, if we can go to the next slide, please. Another concept to mention is basically the taxation of the shares of Argentine companies. Again, this was something very, very sensitive at that time because basically the sale of shares of Argentine companies made by foreign beneficiaries could be subject to the 13.5% on the gross income or 15% on the net income if the seller was a resident of a jurisdiction which was cooperative with Argentina in the exchange of tax information. So again, we are talking about a reform which was published in 2017, and it was defining that the sale of the shares would be subject to different tax rate depending on whether the seller was a company organized in a cooperative jurisdiction or a non-cooperative jurisdiction. And again, the definition of which were those jurisdictions was recently published at the end of 2019. For those transactions, which were basically the sale of shares of Argentine companies by sellers registered in non-cooperative jurisdictions, the rate was not 13.5% or 15% of the net income, but 35% of the net income or 31.5% on the gross income. So as you can imagine, the difference of the tax rate was significant. Another interesting topic of the reform at that time was basically that the government decided to follow a reform similar to the one in the US. So basically the decision at that time was to reduce the corporate income tax. Again, we are talking about a reform which was published at the end of 2017. And according to the reform, the corporate income tax, which was at that time 35%, was reduced to 30% for fiscal years 2018 and 2019. And for fiscal years 2020 and following fiscal years, the corporate income tax rate would be reduced to 25%. This was basically established with a combination of a withholding tax on dividends, which during those years in which corporate entities were subject to corporate income tax rate at 30%, the withholding tax on dividend would be 7%. And during those years in which the corporate income tax rate was going to be 25%, the withholding tax rate would be 13%. So technically the combination of the two rates would be something around almost 35%. The intention obviously of the government at that time was to reduce the corporate income tax rate and to avoid additional taxation if the profits were not distributed. And another concept included in the tax reform at that time was basically the decision not to apply anymore what we call in the past the equalization tax. The equalization tax was effective up to this tax reform and basically was a tax what was applicable on any distribution of corporate profits which exceeded the taxable profits. And if there was any gap between the corporate profits and the taxable profits, that portion of the distribution was subject to a 30% corporate income tax withholding tax. So the decision was to avoid the equalization tax. Basically, in the next slide, we are considering the main topics of the tax reform at that time. And the key issue was basically the possibility to apply the adjustment for inflation. Basically, the tax reform at that time included provision for the possibility to adjust for inflation losses incurred after January 1st, 2018. We know that the tax authority is not accepting the adjustment of losses, even though the income tax law has specific provisions. And we are of the opinion that there are legal arguments to sustain that the adjustment of losses is still valid, even though the tax authority has not announced that they would not accept the adjustment of losses. Then the second concept is basically the adjustment of investment and acquisition conducted after January 1st, 2018. And the third concept is basically the possibility to apply the adjustment for inflation when the variation of the inflation indexes was higher than 100%, but in a period of 3 years. So basically, the test in order to be entitled to apply the adjustment for inflation was if the inflation indexes was higher than 100% in a window of 3 years. Simone, if we can go to the next one. Thank you. The adjustment for inflation then was subject to following rules in the tax reform published in 2018 and 2019. Basically, in 2018, there was a new amendment to the Argentine income tax law, under which it was decided that in addition to the fact that the company would have to would be entitled to apply the adjustment for inflation if in a period of 3 years the company verified a variation in the indexes higher than 100%, then if that requirement was verified, the new requirement was that, okay, the application of the adjustment for inflation would be possible, but in the following 3 years. So basically, the whole provision will apply that the deferral of the income tax adjustment for inflation in practice was for 6 years. Then there was another reform at the end of 2018, and the reform in 2019 basically extended the possibility to apply for the adjustment for inflation to 6 years. So the period of 3 years, which was established at the end of 2018, was extended to 6 years, which means that basically, if the company was entitled to apply the adjustment for inflation, the application would be 1/6 per year. Obviously, this was a very sensitive issue for many companies that were verifying the adjustment for inflation or were entitled to apply the adjustment for inflation. And since the application of certain precedents, we are of the opinion, and we have been assisting many clients in the possibility to apply the adjustment for inflation, alleging the application of this precedent of the Supreme Court in only 1 year and not in 6 years, as it was established in the last income tax reform. Simone, if we can go to the next slide, please. Then we have an additional tax reform at the end of 2019, which basically increased the personal asset tax for legal entities in Argentina. The previous rate was 0.25% applicable on Argentine legal entities based on their net equity. And according to this tax reform, the 0.25% was increased to 0.5%. So basically, the taxation or the cost of doing business in Argentina with respect to the personal asset tax applicable to the net worth of the companies was increased significantly. The second amendment was basically the delay in the application of the corporate income tax rate of 25%. According to the initial reform in 2017, the 25% corporate income tax rate would be applicable in 2020. But this reform at the end of 2019 delayed and postponed the application of the 25% corporate income tax rate as from January 1st, 2021. And another comment in connection with this tax reform at the end of 2019 was basically the publication of the decree which established which were the jurisdictions that were considered by the Argentine tax authority as non-cooperative jurisdictions. The surprise in this list is that Paraguay and Bolivia are included as jurisdictions which are considered as non-cooperative in the exchange of tax information with Argentina. Simone, if we can go to the next one, please.
Sorry for that.
Okay, and finally, we wanted to basically to make a summary of the benefits applicable according to the last amendment of the protocol of the tax treaty executed between Brazil and Argentina. This was published a couple of years ago, but the benefits of this tax treaty and the amendment to the tax treaty are quite significant. So we want to make emphasis on this benefit because basically, according to the tax treaty executed between Brazil and Argentina, there is a possibility to apply a reduced withholding tax on interest payments to be made from Argentine borrowers to a Brazilian entity. The domestic rule in Argentina would be 35%, but according to the tax treaty, this withholding tax has a cap of 15%. A similar benefit would be applicable to the distribution of dividends from an Argentine company to the Brazilian shareholders, specifically for those years coming after 2021, in which the withholding tax on dividends would be 30%. The benefit of the tax treaty would be to put a cap of 10%. And therefore, the reduction of interest on payments to be made in consideration for royalties, which according to the tax treaty are subject to a reduced rate of 10% and 50%. So basically, we want to make emphasis on the benefits of the tax treaty, which are still applicable on bilateral relationships. Thank you very much, Simone.
Well, thank you very much, Martin. I'm so sorry for making you run in your presentation.
No problem with that.
Okay, I was joking with Martin that Argentina, because it starts with A, is always the first, and he's very used to speak the whole thing calmly. And this time he had to run at the end. But
yes, no problem with that.
Argentina is not less important. To the contrary, actually, it's one of our main commercial partners in the region. So I hope next time we'll put Argentina right in the front.
Thank you very much. Thank you very much.
But thank you very much for the audience for staying until the end, and for the panelists for being in this panel. I enjoyed very much. I hope you too. And I hope to see you soon in another event, perhaps next year in our event. Thank you so much. Bye-bye.